Stock market crash. Are we entering a recession? Here's what you must do. Alright guys, let's break down exactly what happened today. The stock market experienced one of its most volatile days in recent memory, leaving investors and analysts alike in a state of shock and disbelief. It was pure chaos on the trading floor. Traders were shouting, phones were ringing off the hook, and the atmosphere was nothing short of pandemonium. Imagine this. You're sitting at your desk, coffee in hand, checking your portfolio, and bam! Out of nowhere, your screen lights up with red and your heart sinks. Your jaw hits the floor as you see your precious stocks bleeding red. It's a nightmare scenario for any investor. The S&P 500, a key indicator of the overall market health, took a nosedive, plummeting 2.7%. This kind of drop is significant and sends ripples through the entire financial ecosystem. That's huge, but hold on, it gets worse. The ripple effect of this decline was felt across various sectors, causing widespread panic. The Dow Jones Industrial Average, home to 30 of the biggest companies in America, crashed nearly 900 points. This is a massive drop that can't be ignored. That's like watching a heavyweight champ get knocked out in the first round. It's shocking and leaves everyone wondering what just happened. And if you're into tech, well, buckle up. The tech sector, which has been a darling for many investors, didn't escape the carnage. The tech-heavy NASDAQ Composite Index got absolutely hammered, plunging a brutal 4%. This kind of drop in the tech sector is particularly alarming given its recent performance. Now, I know what you're thinking. Graham, is this the big one? Is this the start of a major market downturn that we've all been dreading? Are we heading into another recession? The fear of a looming recession is real and palpable among investors and the general public, and trust me, those are valid questions. The market's behavior today has certainly given us reasons to be concerned. We've seen this movie before and it doesn't end well. Historical market crashes have left deep scars and the memories of those events still haunt many investors. But before you hit the panic button and start selling everything, let's take a deep breath and analyze the situation. Panic selling can often lead to regrettable decisions, because understanding the why behind this crash is crucial to making smart decisions. We need to look at the underlying factors that triggered this market turmoil. Was it just a random blip in the market, or are there deeper, more sinister forces at play? Market fluctuations can be caused by a variety of factors, and it's important to identify them. Well, I'm here to tell you this wasn't just some random event. There are specific catalysts that have led to today's market bloodbath. There are very specific reasons why the market is freaking out, and we're going to dive into them right now. Understanding these reasons can help us navigate through this storm. So stick with me, because what I'm about to share could save your financial future. By staying informed and making calculated decisions, we can weather this storm together. Okay, let's talk about the elephant in the room, the trade war. This isn't just a minor skirmish, it's a full-blown economic battle between two of the world's largest economies. The stakes are incredibly high, and the ripple effects are being felt across the globe. Remember that whole back and forth between the US and China? It started with tariffs on steel and aluminum, but quickly escalated into a tit-for-tat exchange that has impacted everything from electronics to agriculture. Well, it just escalated to a whole new level. The latest round of tariffs has sent shockwaves through the financial markets, causing stock prices to plummet and investors to panic. Trump slapped new tariffs on billions of dollars worth of Chinese goods, and China retaliated with their own tariffs. This isn't just a political maneuver, it's a move that affects businesses, consumers, and economies on a global scale. This trade war is creating massive uncertainty in the global market, and investors are running for cover. The volatility is unprecedented, and the fear of the unknown is driving people to make hasty decisions. Then you've got the tech giants, the Apples, Amazons, and Teslas of the world taking a beating. These companies have been the darlings of Wall Street for years, but now, their valuations are being questioned. These companies have been on a tear for years, but now, their valuations are being questioned. Investors are worried about slowing growth, increased competition, and the potential impact of, you guessed it, the trade war. Investors are worried about slowing growth, increased competition, and the potential impact of, you guessed it, the trade war. The uncertainty is causing a lot of anxiety, and it's not just limited to the tech sector. And if that wasn't enough, we've got the R word looming over our heads: recession. The fear of an economic downturn is palpable, and it's affecting consumer confidence and spending. The fear is real, guys. Rising interest rates, slowing global growth, and the trade war are all pointing towards a potential economic slowdown. The indicators are flashing red, and it's hard to ignore the warning signs. Remember the 2008 crisis? Yeah, that wasn't fun. The memories of that financial meltdown are still fresh in many people's minds, and the current situation is bringing back a lot of those fears. While this situation is different, the similarities are undeniable. The market volatility, the fear, the uncertainty, It all feels eerily familiar. The markets are volatile, fear is spreading like wildfire, and people are starting to worry about their jobs, their homes, and their financial futures. The anxiety is real and it's affecting people's decisions and behaviors. But here's the thing, panicking won't help. In fact, it'll probably make things worse. The best thing we can do right now is to stay calm, stay informed, and make rational decisions. In fact, it'll probably make things worse. Panic selling, rash decisions, and fear-driven actions can exacerbate the situation. It's crucial to keep a level head. What we need to do is stay calm, assess the situation, and most importantly, take action to protect ourselves. This means reviewing our financial plans, diversifying our investments, and seeking professional advice if needed. The road ahead may be rocky, but with careful planning and a steady approach, we can navigate through these turbulent times. Chapter 3. Are we facing a recession? So, the million-dollar question is, are we heading into a full-blown recession? Well, the experts are divided. Some economists are waving their hands saying it's just a blip on the radar, a temporary setback. They point to strong consumer spending and low unemployment as signs that the economy is still healthy. But then you've got other experts, the more cautious ones, who are ringing the alarm bells. They argue that the trade war, rising interest rates, and slowing global growth are creating a perfect storm that could push us over the edge. They're worried about job losses, a housing market crash, and a prolonged period of economic stagnation. So, who's right? Honestly, nobody knows for sure. The economy is a complex beast, and predicting the future is like trying to catch lightning in a bottle. But here's the thing, we can't afford to wait and see what happens. We need to be prepared for any eventuality. Think of it like this. You wouldn't wait until your house is on fire to buy fire insurance, right? The same goes for your finances. You need to protect yourself if disaster strikes. Because when the market takes a dive and people start losing their jobs, it's the ones who prepared who come out on top. Chapter 4. 5 Ways to Protect Yourself Now. Alright guys, now for the part you've all been waiting for, how to protect yourself from a potential recession. With the market being as volatile as it is, it's crucial to have a game plan. So, let's dive right into it. Number 1, and I can't stress this enough, don't panic sell. When the market takes a nosedive, it's natural to feel a surge of fear and anxiety. You might feel the urge to sell off your investments to cut your losses. When the market crashes, it's tempting to sell everything and hide your money under the mattress. But this knee-jerk reaction can be detrimental to your long-term financial health. But trust me, that's the worst thing you can do. Selling in a panic locks in your losses and prevents you from benefiting when the market eventually recovers. Remember, you only lose money in the stock market when you sell. The market has its ups and downs, but historically, it has always trended upwards over the long term. Instead of panicking, take a deep breath and assess your investment strategy. Review your portfolio and make sure it aligns with your long-term goals and risk tolerance. Number 2, diversify your income. Relying on a single source of income can be risky, especially during economic downturns. Having multiple streams of income is like having an insurance policy for your finances. It provides a safety net that can help you stay afloat if one source of income dries up. If one income stream dries up, you've got others to fall back on. This could include side hustles, freelance work, or even passive income from investments. Think about starting a side hustle, freelancing, or even investing in rental properties. These additional income streams can provide financial stability and peace of mind. Number 3, build an emergency fund. This is your financial safety net. It's crucial to have a cushion to fall back on in case of unexpected expenses or job loss. This is your financial safety net. Having an emergency fund can provide you with the peace of mind that you can handle any financial surprises that come your way. Aim to have at least 3 to 6 months worth of living expenses saved up in a high-yield savings account. This ensures that your money is not only safe, but also earning interest. That way, if you lose your job or face an unexpected expense, you'll be able to weather the storm without going into debt. This fund acts as a buffer, giving you time to find new opportunities. Number 4, consider investing in assets like gold, real estate, or even cryptocurrency. These assets can provide a hedge against inflation and economic instability. These assets tend to hold their value during times of economic uncertainty, acting as a hedge against inflation. Diversifying your investments can protect your wealth in the long run. And finally, number 5, never stop learning and upskilling. The job market is constantly evolving, and staying relevant is key to job security. The more valuable your skills are, the more secure your job will be. Employers are always looking for individuals who can bring new skills and perspectives to the table. Take online courses, attend workshops, and network with people in your field. These activities can open doors to new opportunities and help you stay ahead of the curve. The more you invest in yourself, the better prepared you'll be for whatever the future holds. Remember, your greatest asset is you. Stay proactive, stay informed, and stay resilient. Outro, are you ready for a recession? So guys, that's the breakdown. The market is volatile, the economy is uncertain, and the possibility of a recession is very real. But that doesn't mean we have to bury our heads in the sand. By taking action now, by diversifying our income, building our emergency funds, and investing in ourselves, we can weather any storm. Now, I want to hear from you. Do you think a recession is coming? Let me know in the comments below. And if you want to stay up to date on the latest economic news and learn how to protect your finances, make sure to like and subscribe to the channel. Hit that notification bell so you don't miss any updates. And finally, please share this video with your friends and family. Let's spread the word and help each other navigate these uncertain times. Remember, knowledge is power. And together, we can make smart financial decisions and come out ahead.